This is the annual meeting of members of the Woodhaven HOA. Today is June 29th, and we're starting at 5:35 p.m. Serena is just joining, which is very nice. Okay. For right now, I would like to go ahead and once again, for those people who were not present from the previous meeting, I would like to announce the results of the election. Elena Garrett, which is myself, and Fahim Rafid were elected as members of the HOA Board of Directors. They are elected for a 2-year term. They will start their term tomorrow, and the board will need to meet sometime in the next week or two to actually do election of officers, which is different from election of board members. And then we will announce who was elected as treasurer, vice president, president, secretary, etc. But for right now, Elena and Fahim were just elected as members of the, by the way, the team members who are present here, Sam, Fahim, I don't see Fahim right now. Right now, we do not have a designation since the election took place. So we're all just members of the board. We don't currently have the designation. We will need to vote for our designations at our next meeting. Approval of minutes of the annual meeting from June 2024. I did send out the minutes of the meeting, the draft of the minutes of the meeting from the previous year election and annual meeting to everybody at least a week in advance. I would like to ask the membership to vote to approve the minutes of the meeting from 2023. I hope you
I move to approve the minutes.
So Gordon moves. Anybody seconds?
I second. Is this? Can y'all hear me?
Yeah.
Yes.
I can hear you. Serena seconds. Anybody against approval of the minutes as presented? Please say against. Okay, approved unanimously. Okay, review of the financial information from Jennifer Maddox and from our bank account. We will do that real quick before we jump to a more substantive part of our conversation. So the HOA checking account balance as of today, this morning, was $17,668, and we had $5,754 in our savings account for a total cash on hand of $23,423. The accounts receivable as of June 24th, delinquencies over 30 days stood at approximately 1,430, which means 30 to 60 days delinquencies. But unfortunately, our delinquencies over 90 days were standing at $13,854, of which about $3,000 of they're not true delinquencies, of which about $3,000 are not true delinquencies. They are still the outstanding special assessments. So some people have paid special assessment in full. Some people paid a part of their special assessment. They're making $100 payments every month. And some people have not paid their special assessments at all. Because special assessments are not technically overdue until 12 months from the date when they were voted on, even though Jennifer Maddox showed them as overdue, 90 plus days, they're not truly overdue, which means we do not charge late fees for them. So as of right now, about 10 people, 10 units still have not fully paid their special assessment. Almost everybody, 36 units, have paid their special assessment in person. Who just joined? I see Mariam. Which unit just joined?
This is Minajaha, Elena.
Which unit are you? Remind me, Dmitry.
I'm sorry?
Remind me which unit you are in. Which unit you are?
Oh, 709.
709. Okay, perfect. Alrighty. We were just discussing our cash flow right now and our financials. We have 2 units currently on a payment plan, with 1 unit who also would like to go on a payment plan next month. The total between the units who are currently in a payment plan is $10,800. one of the units is supposed to pay off about $4,600 of that within the next 12 months. The rest of the units who do have small delinquencies, typically their delinquencies are non-systematic, which means that they do not have continuous delinquencies. They might pay for 4 months and then might have a delinquency on a fifth, etc. So what I would call non-systematic delinquencies. Budget proposals. So let me quickly share our actually, let's go ahead and go into the maintenance issues real quick, and we will go into the budget proposal last, because not everybody can stay for the entire meeting, and the budget proposal is actually pretty boring and has very few new items. So maintenance issues facing the association in 2024, 2025. Roofing. We all survived a very serious storm on May 28th, and we're very lucky that nobody got hurt. However, the storm did cause a significant damage. Literally 4 months before the storm, the HOA spent over $5,000 on trimming overgrown trees. I think that it was a very good decision by us to trim those trees ahead of time during the winter, because if they were not trimmed at that time, God only knows but how much worse our damage would have been. Very quickly, let me go over the damage that was caused by the wind, so you can kind of see for yourself what are we facing with the cleanup. Okay, let me know when you can see my screen. Can you see my screen, guys?
I
Hello?
see it.
You see? Okay. Alrighty, so our roofs looked a little bit like this after the after the storm. It looks very scary, but we got over it. The following units were affected during the storm. And when I say affected, all units sustained at least some wind damage. So for example, you can see that there are some chips. We don't even consider that significant damage. Many shingles are lifted, as of right here and right here. So lifted shingles were too numerous to count. We were only worried about missing shingles and naked ridges at that time. So the units that required significant replacements of shingles were 511. Oh, clubhouse. So the clubhouse withstood a huge blow wind, and for whatever reason, clubhouse was one of the most affected buildings on our property. It almost the full north side of its slope, roof slope, will need to be replaced. Right now, it is tarped up because we are busy with other cleanup, but eventually it will need to be addressed. 511, multiple shingles needed to be replaced, one of the bigger damage that among all of the units. 529, missing shingles on the ridge was pretty much naked. 535, multiple shingles. 547, 539. So as you can see, the second building, which is the building that I'm in, where Percy used to live, almost all units had significant damage, and the shingles needed to be replaced. 539, 541, that duplex in the middle, quite a few shingles were missing. 543, damaged turbine vent. 545, a lot of missing shingles. So this is how it kind of looked like on some of them. 601, 607, some of the most extensive damage. 1/3 of the entire slope, the shingles were gone, had to be replaced. One of the units on that, one of the units reported a leak. 513, 519, 521, 525, and 527 did not have damage to the shingles, but the chimney caps were severely damaged. We assume that a tree hit the chimneys. The tree was flying, or something was flying, because the damage to the caps looks like it's something significantly heavy hit that cap. So this cap is turned completely clean, and it ended up in a neighbor's yard. And this cap sustained damage and will need to be replaced. Right now, it's not operational. Overall costs so far, the tree care and cleanup on the first few days after the event were $4,500. Additional yard care when Greenscape came over and picked up the small sticks from the ground were $1,500. Shingles, materials, and workers for the missing shingles and the tarps were for almost $4,500. The chimney caps, we have not voted yet to approve them, but
Before 11:59.
say again? Sorry, could you repeat that, Sam? Okay. Anyhow, we have not voted to approve the chimney caps, but the projected cost is about $2,000. We still have 2 leaks that were reported on that night. We're still yet to estimate the cost of the actual leak repair. And then we have 2 broken fences. We have not gotten a quote on broken fences. So far, we have spent almost $12,500 on the entire cleanup, with the cost probably going to increase once we estimate the fences and the leaks are estimated. Any questions about the damage to the roofs on the May 28th? Then let's jump to a couple of additional quick review of our maintenance. Actually, let's go.
Oh, I'm
into
sorry,
our-
Elena, can I ask
Yeah.
something? It's related to the storm.
Yes,
I'm just curious, the $1,500 that Greenville, were they paid already for cleanup? And did you tell them that
they
the,
charged us? They only charged us for it. But I have not paid that bill. But to be
good,
honest,
because
go
the
ahead.
cleanup, the after bulk pickup should be inclusive of that $1,500. That little bit of cleanup he did that Sunday was a joke. It was nothing to clean up because all the bulk pickup was still here. So that $1,500 should be inclusive of him cleaning up after the bulk pickup.
I was gonna add that too, Elena, that once everybody was finished, because we still have stuff on our side that hasn't been picked up at all, that we should also negotiate with him that whatever we paid him, just because he said that he didn't want to mess up his blades,
Correct.
that fee that we pay him needs to be included after they pick up our trees.
I will do my best. Will do my best. It's been several weeks since
Because that, yeah, I know, but I'm just saying, like, I put it in a text a long time ago, though, for that to happen, for us to tell him that it was inclusive after bulk pickup. Because $1,500 for him to just pick up, he didn't have anything to pick up, so I don't even know why we would charge $1,500 for a Sunday.
I do not want to
Stay.
get sidetracked, but there was quite a bit to pick up because when I walked my dogs between the buildings, literally I could hardly walk without being scraped by different twigs at least where I walked, it was very difficult to walk. There were a lot of small broken limbs in.
But it wasn't 15, I walked the whole block. It wasn't $1,500 worth for him to pick up when bulk pickup hadn't been picked up. It just wasn't too much of our.
All he did was blow it to the front. That's all they did. I was here. I watched them.
Thank
So they
you,
just blew it to the
exactly,
front.
right. That's not
So
$1,500 worth.
Everything they blew is already sitting on the curbs right now.
Team, let's do this. This is a small issue, and some people join just to finish, just to hear the insurance discussion. We will work on approving his invoice with that included in a private chat between the board members. Do you mind if you move on to the insurance discussion?
That's fine.
Okay, so I would really like to do that because I know some people told me they have a limited time and they only joined to hear the insurance discussion. So on the insurance situation. So what I would like to do, and this is the whole reason why we're recording this, is today I would like to let some people who are going to watch this video, they just joined the HOA, they bought the unit maybe a couple of months ago, and they're still unfamiliar with the entire situation with insurances. Some of you are more or less familiar to various degrees, but very quickly, we're currently facing a big decision point where the membership of the HOA needs to decide how we're going to proceed further with our insurance coverage. And we have a very limited amount of time to reach that decision because this year our roofs turned 12 years old. And from what I have heard, after the roofs, every year that the roofs are older than 10, it becomes harder and harder and harder to find good quotes on insurances, and those quotes that we are getting, they're becoming significantly higher. So the sooner we decide what to do with our roofs, the easier it will be for us to act on that decision. So today we're going to review the current situation, understand how the financial works in the current situation. Then we're going to review a proposed change that we're hoping to present to the homeowners. We'll set the goals for 2024 for the rest of the year, and then we'll discuss what kind of next steps we'll need to take to put whatever we decide in action. To start with, I would like to introduce the topic by saying that after dealing with our commercial insurance for the last 10 years, I do believe that as our roofs have aged, we have reached the dead end on the commercial insurance approach. And we are not going to be very happy with commercial insurance going forward, simply because more and more commercial carriers will start to deny our requests for quotes. So currently, for those of you who are not familiar with how our current commercial policy works, our current insurance is single policy for all units. Commercial policies are designed to have a single policy covering multiple buildings, and they require a dedicated insurance agent, and the insurance agent commissions alone are $11,000. So for $11,000, we could probably cover one of the costs of the roofs, or at least partial roof replacement on one of the roofs. But the point is that we have to pay this very high commission to insurance agent even to figure out what it is going to cost us in terms of insurance coverage for next year. Total valuation. So when you guys are shopping for insurances for your buildings, you're probably asking how much the property is worth. Well, because we have a single policy over all of our buildings, the insurance consider our total valuation to be $8,054,000. That is important because our claims and our deductibles are based on our total valuation, not each individual unit's valuation. And I'll show you how it comes into play later. So single claim for wind and hail. So whenever there is a wind and hail or named storm, that are the reasons for filing a claim with our commercial insurance. Even if we may have only damage to 1 or 2 or 3 buildings, units, they will consider it as a single claim for the entire HOA, means all 46 units. So for that reason, we will calculate a single deductible. Our current deductible on wind and hail events is total of 5% of our valuation. 5% of $8 million is approximately $402,000. So in case we do have wind and hail and named storm as a cost for the claim, this is the deductible that we must pay before the insurance will pay off a single cent. So even if we have only 20 shingles missing, or only if we have one roof that needs to be replaced costing $20,000, until we pay $400,000, they're not going to cover. They will take our claim, but they will not cover anything. For that reason, because of this deductible right here, it is basically an unusable policy. The only time we could really realistically use this policy and expect that $400,000 deductible to work is if we had a total rebuild. So if we needed a total rebuild of all 46 units, I can see how this $402,000 deductible would be wisely spent. In all other cases, except for a total rebuild, at this point, we're basically self-insured and we're paying the insurance policy $7,000 per month to be self-insured. That's kind of the long story short. The current result. So we pay, this year, we will pay $75,000 for property insurance policy that we cannot use. Unfortunately, go ahead. Unfortunately, if we did not have to pay the $75,000, we could potentially even help, repair the roofs, repair their siding, and put on new roofs. But because we have to pay the $75,000, which is a huge percentage of our total income for the year, we're basically paralyzed by inability to perform any additional financial activities with our roofs. So this is our current insurance policy. So factors that are affecting our costs that will probably continue to make our insurance more and more expensive every year. The number of providers. The problem with the number of providers is that every year, some companies that used to cover North Texas for commercial insurance, they exit the markets. Therefore, fewer and fewer companies have to redistribute the workload that the leading companies leave behind, absorbing more and more clients into their portfolio, and therefore stretching fewer and fewer resources for more and more companies. Therefore, the diminishing number of providers increase the cost for everybody else. Age of buildings. Our properties were built in 1973 and 1976. Therefore, as our properties age, fewer and fewer commercial insurance providers are willing to accept our quotes at all. They just say that they do not consider buildings of this age, and they do not discuss the matter any further. So we're being more and more declined more and more due to the age of the buildings, irrelevant of the age of the roof. So you need to remember that there are two ages: age of buildings and age of roofs. Age of roofs is very critical, but age of buildings is starting to become important too. So speaking of age of roofs, the older our roofs are, the less willing the commercial providers are to even accept a quote, accepting a quote request. So this year, when we were filling out our application, our insurance agent asked us how old are the roofs, and we said 12 years, and he said, good, because after 12 years, they will start dropping you. So very possibly that if we continue with the current commercial insurance next year, our options will be even smaller and our costs will be even higher than this year. Ownership ratio. The higher is the percentage of rental units in the HOA, the less willing the commercial insurance providers are to submit quotes. So some of the, we submitted quotes to some carriers and we were declined to a high non-ownership ratio. So the long story short, if we just sit still and do not do anything and do not consider what other options we have, we will be approaching a time when we will basically become uninsurable, or the insurance will cost so much per month to maintain that we will be literally forced to drop it. So what are exactly our costs of insurance for 2024? Let's just kind of quickly review. Our down payment this year was $24,000. The costs of all premiums, now I'm talking about all premiums for all lines. What are all lines that we carry? We carry commercial property, general liability, crime, and directors and officers. So the costs for all lines are $93,000 with $76,500 being the commercial property policy cost. So out of $93,000, $76,000 is the commercial property. And I did a screenshot for you guys so you could see how our properties break down. So general liability is about $2,800. Premium property policy is $76,000. Crime premium is under $1,000. Directors and officers under $1,000. And then the agent fees are $11,500. Our insurance costs monthly are $7,322. It is approximately $160 per unit per month. It is higher by $1,000 than what we paid last year. Deductible is 5% of the total value, which is $402,000 per occurrence. The cost of insurance actually decreased from 2023 compared to 2023. Our cost decreased, our overall cost for this number decreased by $5,000, but unfortunately it decreased for a wrong reason. It decreased because we selected the deductible of 5% on the total valuation. So even though our cost decreased by $5,000, our deductible increased by 2% of $8 million. So what the problem that still remains to be solved? The problem is that we were not able to buy the wind and hail buyback. The wind and hail buyback alone was over, I believe, over $40,000 to buy, which means that we'd have to come up with $40,000 in cash. We could not finance it. And due to the 5% increase of deductible, we're unable to file claims to get the roof repaired. Okay. So I'll just linger on the slide for a little bit. So those people who are readers and like to read, they had a chance to take a look at. Those are our carrier names, just in case you're wondering who are our carriers. So the current cost of insurance are, so when we consider costs of insurance, I would like to break them into two different costs. Definitive costs means very easily measurable costs. I can just take a look at my financial sheet, financial report, and I can see those costs. And then there's hard to measure costs. So the definitive costs are down payment and monthly payments. And also, in case we needed it, the definitive cost would be a deductible. So our down payment is $24,000 and our monthly payment is $73,000. Now, the hard to measure costs are those that occur as a result of carrying this insurance. So for example, hard to measure costs would be because we're unable, after spending $7,300 on insurance per month, we're unable to work on almost any other project outside of priority one issues like active leaks. So what does it cost us in deterioration of sidings? What does it cost us in deterioration of carports? What does it cost us in deterioration of our roof line? How does it affect our property values? How it affect the livability? How it affect our possibility of potentially rats and rodents entering through weakened siding and sparking a fire by chewing on the electrical wiring inside? So those are the costs that we cannot measure, but those costs and risks are present. And then there is an uncertainty cost. So what will happen if a catastrophic event actually occurs? So what will happen if, for example, we need to rebuild completely from the ground up to buildings? How would we go about collecting money for $202,000 deductible? That is a complete uncertainty that currently does not have a definitive answer. So overall, our current situation is, in my opinion, leaves a lot to be desired. So from a standpoint of dues, our dues are $281 per month, which is a lot. And unfortunately, every year, as we continue to maintain this expensive insurance, they're likely to go up probably yearly following the insurance cost increases. Is it satisfactory or should we do something about it? Our maintenance. We have deteriorating exteriors such as roofs with lifted shingles. We have rotted siding. We have broken fences, deteriorating carports. Our clubhouse and pools are currently unusable. Is it satisfactory or should we do something about it? So overall trajectory of both dues and maintenance is negative, despite increases in yearly HOA fees. Our overall condition of the property continues to decrease. And that, in my opinion, is the dead end that we're approaching. We're fast approaching the moment where the condition of the property is getting worse every day and our costs are out of control. What are we going to do then when that day occurs?
I am again. Reading.
Say again? So how does our current insurance affect our maintenance? So I receive these phone calls.
Elena,
Yes,
mute Garden, please.
say again?
Can you mute Garden, please?
1 second. Let me see what I can do. So I'm muting everybody. Alrighty, so what are we going to do with our maintenance? Every single day I receive a phone call. And that phone call says, what happens to the maintenance request that I placed 2 months ago? I have a scratch in my siding, or the roofers found some kind of a deteriorating condition around my flashing, for example. So, and then I have to go on and explain that we have currently ability to only work on acute critical repairs. So acute critical repairs is typically something like an active roof leak or something dangling from a roof that could potentially affect health, safety, and security of a resident. So for those, typically, we have funds in our budget to take care of those, although if several of them stack up, example, we have 3 roof leaks at the same time, and a damaged gutter, and a potential dangerous situation in the balcony, then we have to wait and stagger them to free up funds because we cannot approve too many of them on the same months. Chronic but serious issues. Those are non-emergency repairs that are very serious, like big, huge gaping holes in our siding that were either caused by rodents or caused by during the storm when the fences and other things got damaged. So right now, those are dangerous because not only do they allow water, moisture, bugs, and all other kind of elements in, but they also allow rodents, which could potentially result in rodents chewing through wiring and creating a fire in the unit. We have dangerous balcony conditions. We have damage to clubhouse. So all of those items are serious items that we nevertheless typically struggle to find funds to repair or to address. And those chronic items are becoming more serious day by day, the longer they sit unattended. Interior damage from the leaks. So we have multiple units with interior damage from the leaks. Unless that damage is causing a threat to health and safety of an individual, like we had in units 611, for example, 617 and 631, when the units became uninhabitable and the owners had to move out due to the dangerous conditions in the unit. Unless those dangerous conditions are present, typically we do not have the budget to address the damage from those leaks. And I have people who filed their request for water damage repairs 3 years ago, and they're still waiting and asking me every week how soon will be their turn to be paid attention to because they're paying their dues together with everybody else. Deteriorating exteriors. Our roofs and siding sustained significant wind and hail damage, and also damage from falling and smashing tree branches on May 28th. As they walked the unit, they did show me the pictures where you can see a huge horizontal scrape that looked like a very big cat scraped them, caused by the trees slashing against the siding. Those scrapes will eventually start leaking and allow moisture and other elements in. So those need to be addressed. But we cannot provide meaningful maintenance due to the lack of funds after we paid for the insurance, leaks, and try to address the chronic items. So typically for things like interior damage from leaks and deteriorating exteriors, we have 0 funds left whatsoever after paying for the first 2. So things that we do need to consider going into 2025. Right now, we're faced with multiple serious issues. Roof care. Under the current policy, we have just enough funds to fix acute leaks or to close up gaping holes. But do we have the funds to replace the siding and damaged fascia that is currently allowing rodents and even moisture penetrate slowly into the attics? We do not. How are we going to be able to do that? Water damage. We have to review units with water damage and understand how the HOA will find ever the funds to address the ugly yellow stains that they have all over their walls and their ceilings. Because under the current HOA bylaws, that is our responsibility to address it. Carports. The carports are aging. We already had one carport that collapsed last year at unit 725. It cost us almost $3,000 to work on that carport. Now, some carports are in such paper-thin metal condition that I beg the workers when they're working on the trees on the units not to step on carports because I'm afraid that the weight of 1 or 2 workers will crumble the entire carport structure. But the workers are unable to cut the tree limbs hanging over the carport unless they climb on a carport. So that's a catch-22. The tree is above the carport. The workers need to climb on a carport to cut the tree limbs. The carport becomes even more crumbled due to them walking on a carport. The catch-22 that I do not know how to address, but the long story short, if one of those workers falls through the roof, we could potentially have insurance implications from that. Balconies. Many balconies became unsafe from bad workmanship by homeowners and their contractors. So in most cases, when I do see a balcony that has significant damage, I do observe that it happens as a result of incorrect covering of the flooring people put the flooring on without thinking how the water is going to drain from balcony or how it's going to affect the joist attaching the balcony to the structure. And very often they also have incorrect roofing over it. Incorrect roofing that they themselves put in allows moisture in, and that creates dangerous conditions both on the roofing above the balcony and on the flooring of the balcony below it. How do we handle those items? Siding and gutters. Some gutters have been hit by the trees, need to be thrown away. We have to replace the gutters. I already mentioned the siding multiple times. Some gutters are still detached, but because of the storm, they've been lifted and now they are tilted or they're draining water in the wrong direction. Still need to be adjusted. We have zero funds for that. Large storms. In the event of a large storm, how we will actually replace rather than patch roofs. So as you might have seen in my previous presentation on these roofs, what we did is we basically lifted those shingles, removed some of the shingles, like we would create a row. We would take out the entire row. We would put the new shingles in and attach them the best we could. So now our roofs have a mixture of new and old shingles. The problem with the old shingles is that they're extremely brittle after 12 years of extreme sun heat and exposure to air and other elements. The new shingles are new and flexible. So the new shingles are looking pretty. It's the old shingles, the one that are lifted by the multiple winds already, that are a big problem for us. So when the next storm arrives, these already lifted shingles are more likely to be picked up by the wind and lifted at those pointed areas. And then what if the next storm creates a situation where we have to replace the entire roof slope? That's not cheap. How are we going to afford that? Because we cannot file a claim. If we file a claim, we're just going to end up filing a claim and then receiving a recommendation to go ahead and submit our expense report once it reaches $400,000. So if we cannot file a claim, how will we handle large storms going forward? So does maintaining the commercial insurance make sense under our circumstances? Can the commercial insurance solve the problems that we're facing, given the age of our roofs and the age of our structures? Great question. I still do not know. Now, if we do continue to tinker with the commercial insurance, will anybody be willing to extend us a quote in 2 to 5 years when our insurance, where our roofs are 17 years old, for example? And if they do cover our roofs when they're 15 or 17 years old, what would be the cost per month? $10,000, $15,000, $20,000? How much would it take to collect and the HOA fees to cover those costs? But so that's those are kind of the problem that I'm stating, but what is our alternative? So when it comes to insurance, there are only two alternatives, unless you're willing not to carry insurance at all. Either you go with the commercial insurance, which is what we have right now, or you switch to individual coverage on units. So the individual units now are responsible for their own insurance. Now, that is potentially what we're going to review this year, but it does not necessarily mean that once we finish reviewing it, we'll discover that the solution with the individual insurance is any better than the solution with the commercial insurance. Okay, so the cost of individual units. We have done a little bit of research. My husband went out and collected quotes, which we have discussed in a previous meeting devoted to this topic. And whenever, guys, whoever you're watching this video right now, I'm going to create a link and put a link in the description of this video to the previous video that we recorded about the study that we performed on individual insurance. So according to the research performed literally 4 or 5 months ago, we were able to find that our unit, which is a 3-bedroom, 2-bath, 1,800 square feet, could be covered at a cost of $216 per month, or approximately $2,500 per year, with a $5,000 deductible, and I believe that that was a quote from Allstate. So both wall-in and wall-out coverage was provided, and that includes roofs. And it also included additional structures like carports. Now, during our research, we found that not all companies offered coverage for sevenplexes like our building. Some of them didn't even offer duplexes and left alone sevenplexes like us. Out of 6 companies called, 3 confirmed and 3 more were investigating, but never really got back to us on what their investigation performed. Deductibles, we've had a choice of deductibles from $2,500 per month or $2,500 per occurrence and up. So to create a quote, we asked them to provide a policy cost for a $5,000 deductible. Obviously, the higher the deductible, the lower the monthly payment, the lower the deductible, the higher the monthly payment, and so on. So what were the problems? Many carriers said that underwriting would need to determine availability of the options. So some of them say, yes, we do provide this kind of coverage, but until they actually start underwriting our units, they are unsure what the limits of the coverage would be. So where does this brings us? Oops. My bad. So let's look at the pros and cons of individual insurance that we can already see without even waiting for the underwriters to tell us what they're thinking about. So one of the pros is that each unit receives their own coverage, which will probably be less expensive overall than the commercial policy. And the second big advantage is that in the event of a loss, each unit could file a claim and then actually be able to get repaired on time rather than waiting for the HOA board to finally decide how soon it is going to have available funds. On top of it, once they file a claim, they could probably get coverage for both exterior and interior damage. Right now, the best that they can hope for is that we stop their leak, but the wait time for getting the interior damage repaired is years at this point. What are the negatives of the individual coverage? Well, one of the first one is currently our bylaws and articles of incorporation prohibit anything but the commercial policy. But number 2, in the event that the whole roof needs to be replaced, it is not yet clear how different insurances would interact with one another when working multiple claims on the same roof. Additionally, besides even those 2 problems, there's another couple of challenges to consider. The challenge number 1 is that I'm a realtor. So as a realtor, I'm constantly dealing with people who are trying to purchase houses. And guess what? One of the biggest issues in the last year, for about the last 18 months, have been discussion of insurance. Many people who try to obtain insurance when trying to purchase a house are simply declined. The insurance companies decline to quote on their proposed purchases due to the age of the roof, or sometimes even without any kind of an explanation. And those companies that do provide quotes, the quotes look ridiculous compared to what they used to be 3 to 4 years ago. So the cost of insurance has jumped significantly for all zip codes across North Texas. And I know that because I deal with people trying to secure insurance for their purchases every single week. So therefore, no matter what path we choose, the cost of our insurance are likely to continue to increase for the foreseeable future. The roofs and carports are not getting any younger, and there is no clear path to replace them with newer structures, no matter whether we go with individual policies or we go with commercial policies. In each case, it is not extremely clear to me how would our old carports and old roof not to produce problems once we switch to individual insurance. So what problems do we need? So I kind of touched on it briefly in this section, but nevertheless, we need to seriously consider the following problems. Affordability of care. Now, it's very easy to say the insurance will cover it, but the insurance covers only what it's called 7 perils. 7 perils being, or named perils being fire, wind and hail, riot, act of war, some other things. But in most cases, the problem that we're facing do not occur due to riot or to act of war or due to wind and hail. In about 80% of the situations, those are aging structures and aging materials that simply need to be replaced due to age. The homeowners, if we switch to individual insurances, will be now in charge of replacing aging siding, aging carport, aging roofs. The siding, fascia, and carports are expensive. Will the individual homeowners be able to afford it? What about existing damage? Let's just say we already have existing damage in a unit with the water stains all over the ceiling. How would the existing damage from the previously covered expense or previously covered leaks transfer to the insurance, to the different situation when they have individual insurances now? Not clear. How about filing a claim? Let's just say that we have the kind of a damage that you see here. This damage is across 3 different units. Just by looking at this picture, I can already tell that 3 different units are affected. So imagine that the 3 different units now, look, there is even a dividing line right here. This is where one unit stops, another unit ends. So how would 2 different insurances share this space? Who would be responsible for this damage? And how quickly, let's just say that we have insurance A covering this unit. They were able to come out on the first day that they're called, and they're able to schedule repairs on the second day. Let's just say this insurance B is taking 3 weeks to come out to even assess the damage. How will this unit be able to proceed while this unit is still waiting for their appraiser to arrive? Unclear. How do we enforce coverage? Now, when we have units that have mortgages on them, we do not need to worry about enforcing coverage. The mortgage company will worry about how to enforce coverage. But what about the units that are completely paid off? Are we able to enforce coverage? Can we put it into our bylaws that the units must maintain coverage? And if they get out of compliance and we find out, like, how would we check? Do we ask them to provide an insurance certificate? What if they cancel their insurance? How do we penalize them? What does the enforcement part of this looks like? Unclear. Roof replacement. Let's just say that we start to run into issues where individual policies say your roof is too old. We are not going to take you. Then the roof needs to be replaced. How would the replacement of roof occur under this scenario? And then litigation. Would switching to individual coverages increase the possibility of litigation between units? Who knows? So those questions need to be considered very seriously before we proceed and before we even formulate what we're trying to accomplish. So what I would like to do is for the next board, the one that just got seated today, the new board member, myself, and the other 3 board members who are already been familiar with our problems. What I would like to set up as goals for the board is to, number 1, understand what is actually feasible. Because what we think is feasible and what insurance companies are going to tell us might be 2 different things. So the first thing is to understand what is feasible by contacting insurance professionals and legal advisors to see what can we do with our buildings given our age of the roofs that the insurance companies would actually underwrite. Number 2, what are the costs of going with a commercial versus individual coverages? Because there is always loud costs. I call them loud costs because it would scream at us from the page, and there are costs that are silent costs, the silent killers, so to speak, of our health of our buildings. So how will the screaming costs and the silent costs be stacking up in each case? And then figuring out the logistics. Let's just say we identify the best outcome financially, but just because something makes sense financially doesn't mean that it's very easy to execute from the logistics standpoint. So then we'll need to, once we understand what are the cost of the alternatives, then we need to figure out how to make those costs how to make those savings materialize by using the logistics that would not undo or cancel out all the saving that we work so hard to achieve. So what I'm hoping to do is that we will prepare and review a review for the individual homeowners, and we will do a Q&A once we do the research here and research here. I'm hoping that we'll be able to do a meeting with the Q&A on the results of that research where both the board, the legal advisor, and an insurance advisor are all sitting together with the homeowners answering their questions. Actually, let me switch this to this. So the way that I see the approximate timeline of any insurance change that we might want to put in place would look a little bit like this. So today was the beginning of the discussion. So I'm recording this meeting on purpose because I do not want anybody in the HOA to claim that they're unfamiliar with our problems just because they were unable to participate in this meeting. So today is just an opening opening discussion. Then I'm hoping that the board will be seated in July and set themselves for success by assigning the roles correctly in July. So this way in August, they can jump straight into work and create special meeting number 1 to discuss the results of the initial review of the board. So while the board is getting their bearings for the next year, I will be already working with the insurance advisor and the legal advisor to set out to some outline of what is in fact legally and from the underwriting standpoint possible for our buildings. So by the time that August rolls around, I'm hoping that I will have enough data to request the homeowners to attend a special meeting to discuss the results and to advise the board how the membership would like us to continue with our research. Hopefully by October, I will have enough of the outline of the potential changes to our bylaws drafted by the lawyer that the homeowners would already have the opportunity to have a meeting with the HOA lawyer and with the HOA insurance guy to do a Q&A of the proposal, just like I mentioned before. Then if that Q&A goes well, then we will take the results of that Q&A and finalize the drafts of the changes to our bylaws. And then hopefully by November of 2024, we will be ready to do a special meeting to vote on the proposed changes. Then once we do the vote on the proposed changes, assuming that the owners voted at all to change anything, but let's assume that they did change, they did vote to have the possibility of having both options, both the commercial and the individual coverage options. Then in December, we should already be able to start obtaining the cost and quotes for each unit to proceed with the individual coverage. So our current policy on our roofs expires, or on our buildings, I'm so sorry, expires on February 28, 2025. So by February, if we do everything according to this timeline, then by December, we should be in good situation to enact whatever changes we need to do in December and January. And then by the time that February 28th rolls around, everything will be set for a transition to any kind of new changes that we decide to implement. So what would be the next step in this process? The next step, again, is analysis, cost estimate, and then the vote. So several people, when I was preparing for this HOA meeting today, the one that we're holding today, I have received several panicked texts and calls from the homeowners who said, I am out of town, please do not dissolve the HOA today. I'm like, we did not mention dissolving the HOA, this is an election meeting. So they thought that that today's meeting was to vote on changing to coverage and on dissolving the HOA. So I had to explain to them that before any changes can take place, we have to go through this process right here to perform all the research necessary in 2 different discussions with homeowners before any votes are proposed. So if you're worried about board somehow by the vote of 5 people absolves your current coverage, you do not need to worry about that. Board has no legal ability to change our bylaws by the board vote, or left alone to cancel your coverage by the vote of the board. So the only time anything would change with our insurance is if we successfully passed through all of those stages and arrived at a special meeting vote. Okay, any questions on the proposed changes to the bylaws and to the insurance from the homeowners?
Yeah, Elena, did you want to touch on that when a homeowner obtains their own insurance, the HOA is no longer responsible for maintenance?
Correct.
Did you want to provide details?
Yes.
Okay.
So yes, so I see that we have a couple of questions in the chat room that says, when do our dues decrease? And then can dues increase be tied to either insurance changes or roof replacement? So let's address 2 of those questions. So number 1, in the event where we go through all of the stages and on November or so, the membership by the vote of 67% of all members of the HOA decides that new changes will be implemented and we're switching to individual insurance. If that happens, then you need to understand that insurance comes with responsibilities, which mean that if we're switching to individual insurance, we also switch to individual care for the buildings. Until now, and still now, up until this moment, the HOA will continue to provide care of your units from the paint out, which means that we take care of your balconies, we take care of your roofs, gutters, and exterior structures. If we do vote on a change of to individual insurance, then you would be responsible for your carports maintenance. You would be responsible for your roof maintenance, for your gutters maintenance, for your siding maintenance, fascia, and so on. Brick maintenance, defense maintenance. Now, some people have been asking me consistently, please allow us to take care of our units because you're taking 6 years now to paint my siding and I can fully afford on my own to paint my own siding. So some people actually told me that they're looking forward to being able to take care of their insurance of their buildings because they feel that they have the sufficient financial means to take care of their buildings the way that they want to be taken care of, not the way that the board can decide to afford. So for some people, it might actually be a good outcome, but not everybody had the financial means to take care of a fallen carport, right? So you need to understand that power comes with responsibilities. If you have the power to trigger the insurance claim to get your roof replaced, then you also have the responsibility of taking care of the aging roof. Now, if the answer question number 1, when will the dues decrease? In the event that the homeowners by their vote decide to switch to individual insurances, after that year, that full year, so typically we vote for our dues on the 1st of January or in December, and they're in act for the entire year. Whenever that year runs out, which means the next January, we could at that time review our collections and review our current costs, given that we no longer have to pay for insurance, and then vote whether or not how much the current operations cost, because just because we no longer care for the structures doesn't mean that the trees outside and the grass outside disappeared. So we might be maintaining trees and grass, maybe a clubhouse. So this is something that the board or the homeowners would need to decide. What will the HOA maintain as a result of these changes? But the HOA will still have some costs to maintain, for example, landscaping, trees, carport, etc. So whatever those costs are will be already known at that time. So a new budget could be proposed and the HOA dues could be basically cut at that time. Did that answer the question on when the HOA dues could be cut?
Yes. But is there any way to clarify how, like you just said, I just want to make sure I heard it right. It depends on the existing cost
Correct. So let's
after
just say,
insurance is cut.
correct. So we do not know what will the discussion between the lawyer and the insurance advisor and the membership produce. What if they say we want the HOA to maintain XYZ, but not the roofs and not this, right? I do not know yet. So yes, of course, I cannot answer that right now because I do not know what the ultimate solution is going to look like and how much carrying cost or how much maintenance cost will the board continue to maintain once the insurance changed. And until I know that, I do not know how to answer that question. But as soon as the changes occur and the new costs are known, the board can recalculate the dues. So our bylaws provide that the dues are in act or in force for 1 year. Whatever dues we said, they're in force for 1 year. So based on that logic, whatever dues are currently in effect will continue for the next, will continue until December 2024. And then whatever in December 2024 we decide of this year, they will be going to December 2025 for that year. So probably they will be reducing, if they will be reducing due to the changes in insurance, around December 2025. Now, Gordon asks, can the dues increase be tied to either insurance changes or roof replacement? I do not know. There is no provision in our bylaws that allow for the dues increase to be increased more than 5% every year, except by a vote of 67% of all units. So unless we're able to erase or willing to erase that provision from our bylaws by the vote of 67% of our units, right now the board cannot raise the dues based on insurance changes or roof replacement. Why? Again, in our bylaws, it states that the dues are to be set at the end of the year, let's just say December 2024. If we change, let's just say on February 26, we received the new estimate on the roofs, and let's just say it's higher than it was before, the dues were set in December. We cannot change them now according to our bylaws because they're set for 1 year. Now, different changes to bylaws would probably need to be discussed as we're reviewing all of the bylaws, but as of right now, under the current bylaws, we can only change the dues once a year. And also, we can only change the dues by the vote of the board by 5% increase, no more than 5% increase. Anything over 5% increase would need to be either a special assessment or it would need to go through a regular increase that would be voted by on a special meeting by 67% of all units. Did that answer your question, Gordon? Okay, opinion. Part of this exploratory process, should we have an estimate of the roof replacement and what special assessment would be? I would actually be really in favor of that because I will be honest, as a realtor who sells houses, it is common practice for me whenever my buyers are purchasing a property or whenever my sellers are purchasing a property, one of the first questions that I ask before I even know the names of the buyers and the sellers is how old is the roof? Like literally one of the very first questions after saying, hello, my name is Elena, I say, how old is the roof? And once they tell me how old is the roof, let's just say they say the roof is 15 years. I say, we're going to have issues. I recommend that you try to trigger. Replacement of the roof. Let's take a roofer up on the roof. Let's see if we can find some damage. And if we can find some damage, let's trigger the replacement of the roofs, because it's easier for us to give you 3 sudden doors in increase of your purchase price and cover your deductible than for us to pay $1,600 per month higher for insurance payments for the next 10 years. So very often we increase the purchase price on a property to accommodate the owner having to pay deductible for the replacement of the roof. This is how we get around him replacing the roof, if we can find wind and hail damage. In most cases, we can. So, and if they say the roofs are pretty young, we're like, oh, okay, then no changes are needed. Do you see how important the discussion about the roofs are? And it's, so this is definitely a problem because many people who try to purchase properties with a roof over 12 years old or over 10 years old, they just cannot get quotes. The quotes are not available. They're declined for the quote. So I think that changing our roofs would probably help us tremendously to lower our monthly carrying costs on insurance. Yes, I really do. What would be the cost per unit to do something like that? Great question. But
we did it last. Oh, I'm sorry.
Go ahead.
I could be wrong, but I feel like you addressed this in a PowerPoint, how much it would cost, or maybe it was me. We said we estimated at $2,500 per roof, and it would take years, years, to replace all roofs at the rate that our community pays their assessment fees. But I could be thinking of it wrong, but
$2,500 or $2,500. There is no way that
$2,500 performance painting did an assessment.
Okay, so you're talking about siding or something like that. I'm talking about roof. Roof means you're
No. Okay, maybe it was siding.
No.
Either way,
there is no painting on shingles.
Say it again.
There is no painting on shingles. The way that you replace this, you would strip out so you would need to lift. So just to
No
get
performance. No, I'm sorry. They did roofs. They're called performance painting, but they do roofs. They're a full contractor.
I understand.
And we did the calculations. We put in a PowerPoint. I think it was last year's meeting, and we calculated out what the assessment would be if each person paid another $500 a year. By the time you got around to the 46 house, we would be in like year 5. It was ridiculous.
Gotcha. I do not remember
You
it. I'll
said-
need to look it up, but I do
Yeah.
know, like, for example, we just replaced the roof on a 1,900 square feet building in Concord, and that one was $9,700 to replace. So 1,900 square feet was $1,907 to replace with a $5,000 deductible at that time for that homeowner, because it just happened last week.
Right.
So I know that if a 1,700 square foot one story, which means that the entire 1,700 square feet is the area of the roof. And we have approximately, let's just say 4 times that per each building. So let's just say multiply 9 by 4, and that's what approximately going to be the cost to replace one of our roofs completely. Now,
About
that means,
$500,000.
yeah, so that means
Yeah.
they have to lift up the current flashing, because the shingles are tucked under the flashing. They have to lift up the current flashing. They have to detach the current what do you call them, gutters. So they have to detach all the metal, take the shingles, strip the shingles. Now we have been told that there are several soft spots on the substructure of the roof, which means that potentially a broken beam on the roof. They said when we're walking, we're afraid to step there because there is a soft spot. We're afraid if we step on it, we might fall through the roof. So potentially at least 1 or 2 broken beams will be discovered during the process. But long story short, it's not a cheap and it's not an easy process, but it is definitely going to help us with obtaining quotes. Because right now, almost any insurance company, if you call them and you say, can you insure me? They'll say yes. When they actually start underwriting it, their answer might change.
So they won't follow through? Is that what you're saying?
Well, I'm sure that some of them, like Allstate is like this omnivorous thing that takes almost anything, but they rarely pay their claims. That's the problem with Allstate. Allstate had a really bad reputation. They will take your money, but they will not pay out your claim. But Allstate takes almost just about everybody. But long story short, we need changing or updating our roofs is the biggest achievement that we could achieve. Except for changing the carport. Changing the carport is something, astronomically expensive. But changing the roofs, but you see, most companies, when I call them and I ask them, would you insure my property? They don't ask me about the age of my carport. They immediately ask me about how old is your roof. Right? So by changing the cost of the roof, we could bring down the overall long-term costs of our roof down. Yes.
No, I understand what you're saying. It's just, I don't know. I think people need a realistic understanding of how much they'd have to pay for that assessment. That's all. Because $500, extra $500 is not going to cover it. And the higher you go with the assessment, it's almost like, well, maybe you just need to get your own roof. But we can't, because some houses do. A lot of houses, my house doesn't share a roof, but a lot of houses do share a roof. It would be a lovely option. I just think the community needs a realistic. They need a realistic check on how that assessment is going to be high. It's not going to be some little, they're struggling to pay $500 now. And I'm like, come on, y'all, really?
Yeah, and 10 people have not paid their assessments yet.
Right. And I'm like, it's going to be a lot more than that because it would be more feasible to go that way. But it's our community. That's the problem. So I'm done.
Yeah, correct. Any other questions on this presentation specifically? Then let me go ahead and proceed with just a quick overview of the other maintenance issues. So we already covered some maintenance issues. Let's go over into the other issues. So roof leaks right now. I think I already covered pretty much everything on our roof, the storm that we survived. Roof leaks right now. As of right now, we have 3 active reported leaks. When I say leaks, means serious leaks. And then 1 leak at unit 543 that's under a door. But the leaks are at 519, 605, 725, and 543. So those are the units that currently have leaks. And we have a clubhouse that has 2 huge leak spots on different parts of the ceiling. Leaks that already been taken care of this year from 2023 and until now. We have repaired leaks at the following units: 523, 725, 611. Now, 611 was an odyssey. 611 had the ceiling collapse due to the amount of water in their attic. The ceiling collapsed. They had mold all over their unit, all over their upstairs. We took several months to do mold remediation, clean out, demolishing the old materials, and rebuilding some of the walls and the flooring in that unit. So the 611 was an epic repair. Siding, as a result of the tree branches and other objects flying through the air during the storm, the siding on several units sustained significant damage that looks like big cats scratched the side of the units. And eventually, not right now, but eventually this will somehow need to be addressed. Carports, the only carport that really collapsed this year was 525, unit 525, but many carports do already show signs of extreme fragility. Landscaping, we have spent a significant amount of money earlier this year, thank goodness, on trimming the overgrown trees. That was a good decision. But our lawns sustained significant damage during and after the storm. So I'm sure you already observed the branches laying on the curb kind of killed a lot of grass underneath it, right? Right now, I'm observing almost no grass under whatever is remaining of those poor little curb grass. We will be working with Greenscape, so where the branches used to lay, the grass is almost dead. But also we do have multiple big bald spots around the unit, so we need to work with the Greenscape to understand how we're going to recover the grass for this year. The clubhouse right now is unusable. Right now it has no AC. So why does it have no AC? When we initially looked at it, the estimate from the AC guy was that there was a part that just burned out. A part needed to be replaced, about $900. But also the Freon is probably mostly gone, and the Freon or R22 is not that cheap to replace in that unit. So as of right now, the clubhouse has no AC because we voted to move with the leak repair in lieu of repairing the putting the AC repairs in. And also the roof was very badly damaged during the storm. It currently has 2 leaks. It's tarped up, and we need to get quote in replacing the part of the slope on the north side of the clubhouse. The pool, association pool, remains closed from 2019. There have been multiple discussions on how to fill that pool in with dirt potentially. Right now, we're dealing with other bigger issues. We have a bigger fish to fry than filling in the dirt, because filling the dirt into the pool is not cheap either. But
Lena,
as of right now, the pool is inaccessible and will remain inaccessible for the remainder of the year.
Lena, could I
Yeah.
put something in real quick?
Mm.
You mentioned the air conditioning being out in the clubhouse.
Mm-hmm.
We just had air conditioning guys out this week, and talking with them, they pointed out to me that the older units use a type of Freon that is no longer legal for them to use or even to refill.
Yeah.
So we may have issues to look at with that down the road.
Correct. That
Just-
R22 coolant, very hard to find. And as you said, almost impossible at this point to find. Now, how our units will be managing this whole thing, because our units are still like my personal unit, are the units in my unit or the AC in my unit still uses R22, the now outlawed Freon. So how this will all thing resolve with Freon in our HOA units is beyond my comprehension at this point. It's a little scary, but nevertheless, right now the clubhouse and the pool, you can use them if you don't mind having no AC on, but other than that, it also has leaks. So I'm afraid that if we do not take care of those leaks, we will have mold growth in the ceiling, and that's not good. So my recommendation is, I know we're super concerned about addressing the active leaks right now, but getting mold infestation in the clubhouse is probably not going to help us to solve any problems. Any questions about anything that I have covered so far? Then let's do this. Before everybody gets too tired out and start dropping off, let me stop presenting. Let's go over, we do need to ask people to volunteer for nominating committee, financial committee, communication committee, and maintenance committee. Do we have any volunteers for the next year to be on the nominating committee? Now, people who are running for election, will not be able to be on a nominating committee. So Sam, you would be running for election. You would not be able to do that. And
Okay.
neither will be Ahil, because Ahil is also will be running for re-election if he chooses to run. So the result, neither Ahil nor Sam will be able to do nominating committee. Gordon, how did you feel about that? I know the experience was
Elena.
good in the clubhouse.
Yeah, Elena, I have no problem with being on the nominating committee. I'll do it again.
Okay, so let's put Gordon for right now. At least we have one, and then we will see, because we need one member of the, actually, let me put me. So Elena, so a nominating committee requires a chairman, and a chairman must be a member of the board. So because the only other people who are running this year or are not going to be running for election will be me and Fahid. Fahid is too young and he doesn't really know much how to run nominating committee, so I would have to be a chairman of that committee. So Gordon and Elena for now. Financial committee, but anybody now, that was just for nominating committee. There is no restrictions in the financial committee, but any like to be on a financial committee. Because the financial committee will be in fact, the one who will be reviewing all the requests, all the costs of the insurance. So the financial committee this year is going to be more important than it was ever before. Anybody? No takers. All right, we'll continue to ask around. Communications committee, we don't have a need for communications committee. One time I planned for us to have a website of some kind, but right now we have much more serious problem than absence of websites. So I would say communications committee is not too big one, but maintenance committee is important. Would anybody like to be in the maintenance committee? Okay, I will put myself on the maintenance committee, so there will be at least a chairman. I'll be the chairman of the maintenance committee, and then hopefully we'll get some volunteers for the maintenance committee as well. All right, so I do have a another conversation. So in the chat, there is a question about future board topic. Please find the cost of demolition of clubhouse and fill the pool to prepare for selling. That is from Gordon. So right now, that is something that would not be, well, we would need to do a separate legal study, separate from a legal study that we're doing on insurance. And that will take some costs as well. It's not in our bylaws. Serene is currently pointing out that demolition of a clubhouse and filling the pool and removing the amenities that are actually spelled out in our bylaws is not something that we can currently do by both of the board. So I would say for right now, let's separate the topics. We need to address the most pressing issues first. So the clubhouse and the pool are not currently costing us any money, even though they're not producing any money. I recommend we first solve the issue of our costs and then turn our eye once that dust settles, turn our eye to other issues, because legal costs right now, we have not discovered them. But last time when we tried to change something, those legal costs really bite. So I would be just careful about randomly requesting lawyers to review, things that do not necessarily add to our bank account.
I was going to point that out. The last time we made a change to the bylaws, it was quite a lengthy process and
It was
expensive.
quite a process and of course, now current lawyer is saying that he is estimating it to be $5,000, and I've dealt with multiple lawyers in the past, and not one time did it cost me $5,000 to deal with a lawyer. It was always about 3 times that amount. So until we actually see the legal bills from the insurance review, I would say we do not ask the lawyer to engage in anything else. Okay, any other questions? We are currently at the point where anything goes, even what's not on the agenda. So if you have any questions that we have not covered before and were not on the agenda, please bring them now, because we're 5 minutes away from 7 o'clock, or we will close the meeting. Okay, apparently there is no other questions. In that case, the annual meeting is closed at 6:54. You get to go home a little bit earlier. 54, I'm sorry. 54. So thank you so much, everybody who joined, for sticking with this very long and boring presentation. I'm sure not everybody enjoyed sitting through it, but let's hope that knowledge is power, and this knowledge will empower us to understand how to save money on our units in the future. Thank you so much, and I'll see you guys at the next board meeting.